Tata Motors approves a partial divestment in subsidiary IT services arm Tata Technology via an IPO. The stock is up 1%.
News reports indicate multiple PE firms have approached to buy Fosun-owned Gland Pharma. The deal, if it goes through, will be one of the largest deals in the pharma space at around $3.5 billion.
Dalmia Bharat announces a deal with JP Associates to purchase cement, clinker and power plants from JP Associates for over 5,600 crore rupees. The stock trades lower as analysts say deal timeline, additional capex, limestone reserves remain questions.
KEC International wins orders worth 1,300 crore rupees in its India business. The stock is higher with a gain of 4.5%. Hello and welcome to Chartbusters. I'm Naishal D'Souza and joining me today is Reema Tendulkar. Well, Reema, markets more or less flattish. Broader markets, though, showing some bit of traction. So let's see how things pan out.
Indeed, and it's the banks which are surging now. So just pull up the Nifty banking index. That's up close to about 0.5%. The PSU banking index continues to rally 1.5% gain on the Nifty PSU banking index, taking its December rally to about 10.5%. So that's where the strength is coming in from. But let's welcome Shilpa Raut from Prabhudas Leeladhar Private Limited now for a technical check on the markets. Shilpa, morning. How are you reading the tea leaves now? What are the charts suggesting and any trade that you would recommend?
Good morning, Reema and Nigel. Like Nifty is in the range of 18,500 to 18,800, so nothing changes much. In fact, this is where you should go long in Nifty with a stop loss of 18,400 on the downside. And I'm looking at targets of 19,000 again very soon, maybe this series. Bank Nifty, it is very intact with 43,000 as the support, and for targets of 45,000, one should still be in the game now.
Okay, all right. Hi, Shilpa. What about individual stocks? What are the picks you have for us?
I have two buys. One is Hero MotoCo. Hero Moto is trading at 2,800 zones in the futures now. One should go long here with a stop loss of 2,770. I'm looking for targets of 2,860 to 2,900 zones very easily. And the other buy is Muthoot Finance. Muthoot Finance is actually consolidating in around 1,100 zones for quite some time now. It's just about time that you see a massive breakout and you see targets of maybe 1,160 to 1,180 zones. So Muthoot Finance is another buy with a stop loss of 1,080. Risk reward is very favorable. One should participate.
Thank you very much, Shilpa, for joining in. Get into a break. On that note, on the other side, we'll be joined by the Chief Financial Officer of LTI Mindtree, Vineet Theredesai, to discuss the demand slowdown in the industry. All this and more after a short break. Stay tuned.
A volatile, uncertain world where product life cycles are shrinking, tech changes are accelerating, and geopolitical pressures are building. This mix has made what has often been called a solitary job even more challenging. I'm talking about the CEO of the 21st century.
As a CEO, I tell you, I'm finding that I have to become a learning CEO. I have to go to school all the time.
In order to have continuous or renewed success, you really have to question status quo, and it doesn't come from a source of knowing it all.
I think if you start with the idea first and the company second, that's probably a good approach.
What does the job of a CEO entail today? And is there a value pattern that separates the good CEOs from the very best? So who are the high-performing CEOs in India, and what is their recipe for success? The Winning Mindset, the CEO Guidebook, coming soon, only on CNBC-TV18.
Well, the Nifty is holding with gains of close to around 30 points odd, but that's the big news that's flashing for you down on the screen. Mr. Bidla is said to weigh selling the insurance brokerage unit, and that's housed under AB Capital. So that's a piece of news that's coming in there. I think the last few days as well, the stock was buzzing around, and as we speak, just pull up the intraday chart, the stock has moved to the high point of the day. So they're looking at raising some capital, and maybe it could be via their insurance brokerage unit that is currently housed under AB Capital. But Reema, we've got a big guest with us up next.
Absolutely. So after HCL Tech sounded the warning bells on growth, What does India's sixth largest IT company, LTIMindtree, have to say about demand? Is demand slowdown an industry-wide phenomena? What's the extent of furloughs in Q3? To understand this and much more, we are now joined by the CFO of LTIMindtree, Vineet Desai, joining us in what is the management's first interview as a listed entity. Post their merger, once it got listed, this is their first interview. Vineet, thank you very much for joining in. This is Rima here. The first question is, if you could talk about this Q3 furlough. It appears to be far more than what the companies were earlier anticipating. What's the extent? How much of growth will it shave off, and which sectors?
Yeah, good morning, and thanks for inviting me on your show. I think so. While yes, Q3 is typically where you see the furloughs coming in. I think so. What I wanted to clarify is that this is not something unusual that we are seeing. This is if you look at both the companies independently in terms of how did they grow in the first half or the first 2 quarters of the year, you are seeing. Compared to that performance, you are seeing Q3 slightly getting impacted because of the furloughs. But it is not something that we are looking at as significantly damaging our growth trajectory. Both companies, both on quarter-on-quarter as well as on a year-on-year basis, we are still anticipating we will show a decent industry-leading growth. And as far as our full-year target for FY23 is concerned, we still believe we are on track to achieve the industry-leading profitable growth.
I understand, Vineet, that Q3 furloughs are not unusual, but are they more this time? And if yes, again, which sectors are we seeing it in?
In some pockets, I wouldn't call it as a structural that it's coming across all the companies or across all the sectors. It is specifically into the BFSI and few sectors that we are seeing. But again, as I said, apart from that, there are few places whereby we are actually not seeing any impact, and we are actually seeing a significant growth coming up in Q3. So partly some of these furloughs impact is actually getting offset by growth coming up in certain other sectors. So on an overall note, when I look at the company, I think so we are still doing a reasonably significant growth there, even in Q3 and as well as in Q4. But what I wanted to, the furloughs point is only to be taken in relation to how strong H1 was versus H2.
So you said BFSI is seeing higher than usual furloughs. Which pockets in BFSI? Is it broad-based? Because still 2 months back, the worry was only on the mortgage segment. Are the others, parts of the BFSI segment like capital markets, etc., also seeing higher furloughs? And the other point, which are the other sectors or verticals where we are seeing very strong growth? You spoke about that. Could you elaborate?
Yeah, so again, in BFSI, it's typically the banking sector whereby you see the impact coming in, but not across all the sectors of BFSI. And on the growth side, our travel vertical continues to remain still very, very strong. The retail segment has been, we have been calling it this out even in the past, the retail and consumer packaging sector has been impacted partly. But the sectors which I called out, travel, etc., they are doing extremely well. Healthcare is doing very well. So we are pretty confident that it's not a structural change that is happening. It's only a cyclical impact that is what you're seeing at this point of time.
You said Q3 will see reasonable growth as a merged entity, right?
Yes.
Okay. For LTI per se, when we had chatted with the management, they said Q3 growth is going to be better than Q2. So as a merged entity, can you tell us, will Q3 be better than Q2, or will it be slightly lower because Q2 was very strong?
No, so if you look at both the companies independently, Mindtree was always having a strong H1 versus H2, while LTI was always having an H2 much stronger than H1. So actually, we are actually seeing a balancing impact coming in, while Mindtree is not seeing that amount of significant degrowth or anything. LTI, erstwhile LTI continues to show that strong growth.
So Q3 vis-a-vis Q2, how will it look for the merged entity?
As I said, we have just a month old right now into things. I don't want to call out any specific numbers. What I can tell you is there will be a quarter-on-quarter growth as well as a year-on-year growth, significant year-on-year growth. And if you look at our full year plans, we are pretty much on target to deliver the industry-leading growth.
Okay, so we'll see quarter-on-quarter growth in Q3 and significant year-on-year growth for the merged entity LTI Mindtree. You'll have also spoken about one-off costs impacting Q3 margins. Could you quantify it?
Yeah, it will be. So some of the expenses, you will see majority of the thing in Q3. It's we are anticipating around 100 bips sort of an impact. It's a one-off cost. It's not a and we wanted to honestly take off whatever are the cost between Q3 and Q4, so that when we start for FY24, it's on a clean slate without any baggage of the merger coming into our play. So most of the expenses, it will be in the range of around 100 bips, max 120 bips.
And nothing in Q4? No one-off integration, merger-related costs in Q4?
So some expenses, as you know, that may get spilled over, but I'm talking of the overall impact in the range of around 100 to 120 bips.
Okay. Could you give us some indication of what CY23 budgets are looking like? If there are certain entities which are stressed, like the banking space in BFSI, a couple of your retail clients you've indicated in the past that are facing company-specific, client-specific issues, etc. What about tech budgets? Are any of your clients talking about budget cuts?
Honestly, not. We are not seeing, there is a general sense of cautiousness. So everybody is trying to watch the space and but we are not seeing any reductions or any cuts that are coming on our way that are significantly impacting our plans as far as both calendar year 23 is concerned. What I can say is, if the retail consumer is less of a macroeconomic challenge, but it is more of a specific certain industry issues that are prevailing in Europe because of the war situation and the supply chain disruption that has happened in China. But that's not nothing is again structural to the overall because of the macroeconomic environment. We do believe that cautiousness is every quarter customers are looking at it. We are seeing a lot of deals coming on our way. So it's just a general caution. Everybody's watching the space. Everybody's hoping that there is a soft landing and not a hard landing in US. And that's how things will move on. So we are also taking it quarter by quarter at this point of time.
No client has reached out to you and said that we are exploring budget cuts, tech budget cuts?
Not really. No major discussions at this point of time which are indicating. Rather, we are looking at some increase in the budgets only.
Extent of increase, Vineet?
It's very difficult to call out because it's towards the fag end of the calendar and people are still in their budgeting cycles. So it's very difficult to call out. What I can say is there are no impacts as probably what is being heard of. There are no such impacts we are seeing at this point of time in terms of budget cuts coming on our way.
Could you talk about...
There's a sense of cautiousness, but not really any. And that's why we are saying we are also watching this space closely. We are taking this quarter on quarter and looking at it, but no major changes, no major cuts we are seeing at this point of time.
Okay, so no major tech budget cuts. In fact, if anything, we are likely to see budgets for the technology space only go up. Recently, I think you spoke to one of the brokerages where you indicated that you plan to slow down hiring next year, considering the moderation in attrition, the focus on utilization and deployment of existing bench. Tell us your hiring plans for the merged entity and how much lower would it be?
No, I don't think so. We said that we are looking at slowing down our hiring. I think so. What we had mentioned was, since this is the first quarter whereby both the companies are coming together, both the companies had a good amount of bench available, and now the resources, the free interoperability of resources, which was restricted till the first day of the merger, is no longer there. So we want to assess the overall bench, look at the demand. Anyway, Q3 is relatively, we have sufficient amount of people to take care of the demand. So we don't want to go and overhire. But there's no change as far as our hiring plans are concerned, and we will continue to hire starting. We're just trying to consolidate it and take a stock of the situation in Q3 before we press our pedal on the accelerator again.
Okay. L&T is a part of its Lakshya plan. AM Naik had spoken about acquisitions, spending close to 7,500 crore for acquisitions in the IT space. Is this something that's on the anvil right now, or do you think it could take place a little later once your merger-related formalities, once you've got the merged entity up and running? Can we expect an acquisition in FY24 from LTI Mindtree?
No, absolutely. It's that is always M&A is irrespective of this merger. We always continue to evaluate the opportunities that are available in the space. And what our chairman said is absolutely right. Now, with the balance sheet strength close to $1 billion in cash, I think so our ability to go and do some strategic good acquisitions is definitely there. The valuations in many spaces are quite reasonable now compared to what they were a year and a half back. So it does make, and it is a part and parcel of our strategy to look at some significant acquisitions. I can't comment whether it will happen something in current financial year or next financial year, but anything that comes even in the near future, we'll be very, very open to considering that.
Any opportunities you're currently evaluating? Any number that you could help us with where due diligence is on?
No, not really. I wouldn't call it as a number. See, we don't want to just do acquisitions for the size just to get a scale. We want to do acquisitions which are strategic to our business, whereby we will be able to actually do a significant plug in some white spaces in terms of certain business opportunities that we are looking. So instead of going and investing today, if there is something which is readily available over the table, I think so that's what we will be looking at, and just will not do acquisitions just for the sake of scale.
Very quickly, one last question. How many clients of yours would you say are currently stressed? 1, 2, 3, 4, some number?
See, we have a 700 plus clients with us. I don't think so I can call out that number specifically, but it's not, if I had to just do some thumb rule, probably you may see 20, 25 for clients probably having certain amount of budget stress at this point of time. And that's, as I said, more because of the specific issues in the European region, not on a worldwide basis.
Okay, that's very helpful to know. So out of the 700 strong clients that you have, 20, 25 may be facing some amount of budget stress. Thank you very much, Vineet, for joining in.
All right, well, insightful conversation there, Rima. Well, for the time being, though, we'll slip into a short break. 24 hours to go, though, for mutual fund visionaries like Navneet Munot, Shrikant Nadella, Nilesh Shah, Radhika Gupta, and more. They will decode the future of the mutual fund industry. Join the conversation on Money Control Mutual Fund Summit in Mumbai on 14th of December, 3:30 p.m. onwards. Welcome back. Well, the markets are holding with gains of close to around 40 points. So the dip of the day has got bought into. Bajaj Finance and Bajaj Finserv, both of them are making a bit of a comeback. And the IT index, that's down roughly around 6.5% over the last 5-6 trading sessions. That one's making a bit of a pullback from the low point of the day. So the Nifty IT index itself has seen a bit of a rebound, at least as we speak. But as always, let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Bharat Gyani joins us to fill us in about a stock that is tracking very closely. Bharat?
We'll speak on Lemon Tree Hotels Limited. The company posted better than expected performance in the quarter gone by. Revenues grew 29% as compared to the pre-COVID quarter. Average room rates were up 19% as compared to the pre-COVID quarter. The company also added room inventory. EBITDA margins came in at 48% as compared to 32% in the pre-COVID quarter. The company posted profitability at the net level for the second consecutive quarter post-COVID-19. The demand scenario continues to remain strong, and with the second half being seasonally strong, we expect further improvement in the demand. The hosting of G20 presidency by India next year would be an additional growth trigger for hotel companies like Lemon Tree. In view of the strong demand, Lemon Tree is adding about 30% room inventory over the next 1 to 2 years. The margin improvement is expected to sustain, given that the cost reduction is structural in nature. The demand-supply dynamics for the hotel industry are expected to remain favorable over the next 3 to 4 years. At the current market price, the stock is trading at an EV by EBITDA of 19 times its FY24 projected estimates. Investors can add the stock in the portfolio. Thank you.
All right, thanks a lot for that, Bharat. Well, on that note, though, we'll have to wrap up on this edition of Chartbusters. Thanks so much for watching.